Okay, so naming your new business is super fun, but choosing a structure, well, that usually isn't. But this choice does three important jobs. It sets your liability protection, it defines your paperwork, and it affects how you're taxed. So let's make it simple. Welcome to the Growth Table, Simplifying Small Business. I'm Karen Velez, multi-passionate entrepreneur with more than 25 years building small businesses and helping others to do the same. I am your business big sister, helping you cut through the noise so you can work smarter and build something sustainable. The first 10 episodes of this podcast are designed to be your roadmap to starting your business or reevaluating an existing one to see what can be improved. We began with clarity and direction in episodes 1 through 3. Now we are moving on to step 2, and that is foundations and formalities. The next 4 episodes will focus on probably the most intimidating but also very necessary components of starting a business: your structure, some of the legalities, money matters like bank accounts and accounting systems, and how to know when it's necessary to outsource some of the important services and when you can DIY it. Some of this can be confusing, so I'm going to try to give this to you in plain English so you know what decisions need to be made and how to make them. One of my favorite phrases is, "We don't know what we don't know," and it's hard to make decisions when that happens. So let's break it down. Today we are starting with choosing your business structure, and as you can see, we have moved from the couch to the desk. We are in serious mode here, okay? So, your business structure is a balance of three different things: protection, paperwork, and tax treatment. So, we're going to pick the one that fits your current level of risk and revenue and admin tolerance, knowing that you can change this later as you grow. Okay. Now, I'm going to describe common US options in plain English. Specific rules vary by state and situation. So, this is educational. This is not legal or tax advice. So, please consult a qualified professional for your details if you need to. So, in terms of business formation, let's start with the simplest path, and that is sole proprietor. So, if you start doing business under your own name without forming anything, right? This is your default. So, you and the business at this stage of the game are legally the same person. With a sole proprietorship, your income and your expenses go onto your personal tax return. You will file a Schedule C that goes along with your personal taxes. The startup for this is minimal, at least for as far as the effort is concerned, right? You may need local registrations or a DBA registration if you're using a trade name, meaning you're using a name other than your own, like a business name. Other than that, there really isn't anything else to do in terms of starting as a sole proprietor. So the pros to this is it's super fast and cheap to get started. You have very simple taxes. There is no separate business return that is necessary for a sole proprietorship other than adding that Schedule C to your personal return. And so this sort of makes a sole proprietorship the perfect status for testing an idea or for a company that is like very low risk services, okay? The downsides to a sole proprietorship is that you have absolutely no liability shield. So if the business is sued or owes money to somebody, your personal assets can be at risk just as much as the business assets, okay? It is a little bit harder to separate your finances if you're not super disciplined when it comes to being a sole proprietorship. And sometimes, being a sole proprietor can feel a little bit less official when you're like opening accounts or working with certain partners, especially if you're not using a doing business as name, right? So, where a sole proprietorship might fit is when you're validating a new offer with just a handful of clients. If your risk is very low, so you're doing digital services or, consulting or some low exposure work, and you want to start right away and keep your admin to nearly zero, okay? That is who a sole proprietorship is for. Some of the common mistakes that are made with sole proprietorships is number one, commingling your money. So even as a sole proprietorship, open a separate bank account and keep very clean records. Make sure that there is that separation between your business money and your personal money. The other common mistake I see is ignoring permits and taxes. Just because you don't have a very specific sort of business structure or a minimal business structure being a sole proprietorship does not mean that there isn't some sort of compliance to follow when it comes to permits and filing your taxes. If you're here just to prove demand very quickly for your services, then a sole proprietorship can be a very great starting lane. But then if risk starts to creep up or you start to gain traction, then you might want to step into an LLC. So let's talk about an LLC. That is sort of the crowd favorite for small business owners. It is a legal entity that is separate from you, which means it provides a liability shield when it is properly formed and maintained. So your business obligations are generally separate from your personal assets. LLCs are very flexible. They can be for one owner or multiple owners. And the default tax treatment for being an LLC often just passes through to your personal return. You can choose other tax elections later if you want to. So the pros to an LLC are that big one, which is liability protection. This is the really big one and usually the reason why sole proprietors step up into becoming an LLC. The other good thing about an LLC is it is flexible in terms of ownership and profit distribution. From a professional sort of optic standpoint, banks and vendors and clients often prefer or feel more comfortable working with formed entities rather than a sole proprietorship. And again, that usually goes back to that liability protection. And forming an LLC is usually simpler than forming like a corporation or something. You've got a lot fewer formalities when it comes to an LLC. Now, the cons to that are there is a formation cost. So you likely are going to have to pay a fee to file in your state to become an LLC. There might be an annual fee or an annual report in some states. So we are talking a bit more admin than a sole proprietorship. You're going to need an operating agreement and possibly those annual filings. And you do still require a very clean separation between your business and your personal finances to preserve that liability shield. So just because you're an LLC and you've got that sort of inherent liability protection that separates your personal assets from the business assets, it does not mean you can go start commingling your finances again. You still want a very clean separation between your business and your personal money, okay? So an LLC is a good fit when you have a little bit more moderate risk. So maybe you're doing in-person services or products or events. If you have growing revenue, if you're starting to grow the business and you want a little bit more of a professional foundation, or if you may want to add partners later on down the road, or if you want to add outside help later, you're anticipating it won't just be you by yourself. It's not to say that you can't hire people or have contractors as a sole proprietorship, but it is much easier to do when you are an LLC. In order to keep that level of protection between your personal finances and liability and the business liability, you absolutely have to keep separate bank accounts and credit cards. You want to sign those contracts as the LLC, not signing them personally, because then you're now agreeing to be personally liable, okay? Keep your operating agreement. Even if you are solo, if you're running this yourself, you still need an operating agreement for an LLC. You want to keep filing all those required annual reports and paying those fees on time if your state requires it. And maintain basic insurance that is appropriate to what it is that you are doing. This could be just a general liability policy, but if you're providing products, then it might be a product liability policy. It is easier to do that if you are an LLC. So the LLC is insured for everything that you do, okay? And as far as the taxes are concerned, on a high level, if we look at this, a lot of single member LLCs are taxed like sole proprietorships by default, which means your taxes are still going to flow through your personal income taxes on a Schedule C, right? If there are multiple members of the LLC, then you are likely filing a separate federal tax form, and you are going to do that as the business. But then, again, the results of that is going to pass through to the members of the LLC as a Schedule K1, and that is how the income gets taxed. So the LLC itself, the business itself, does not get taxed as a separate entity. The owners are still being taxed for the income solely. Now, you can elect different tax treatment later on down the road if that becomes beneficial, and you can elect to be treated as a corporation or as an S corp, if that becomes beneficial. But the default of this is that it passes through to you on your personal taxes, right? So for a lot of solopreneurs and micro businesses, the LLC is a very practical sort of middle ground. You get solid protections, very reasonable admin requirements in order to keep it going, and you have room to grow. Okay. The third, probably most common business formation for small businesses is that S Corp, okay? And really, this is just a tax election, right? This is why being an S corporation commonly causes confusion. An S corp is not actually a type of company that you start from scratch like an LLC or a C corporation. It is a tax election that you make with the IRS, often after you have formed an LLC or a corporation, so that your profits are taxed in a specific way. So an S corp is a pass-through tax status. And the whole reason we do this is to reduce self-employment taxes on the profits that are made by the company after paying yourself a reasonable salary through payroll. So you become both an owner and an employee who runs payroll. So the pro to this is that you have some potential tax savings there once your profit reaches a really meaningful level. And it still keeps a little bit of a pass-through structure for those federal income taxes. The downside is you definitely have more admin when it comes to an S corp. You have payroll set up, you've got payroll tax filings, often a separate corporate style tax return. It's an 1120S if I remember correctly. Also with this, you have to pay yourself a reasonable salary for the work you perform. That is a requirement of being an S corporation. And usually this only makes sense at certain profit thresholds where the savings of being an S corp are going to exceed the added costs of filing to be an S corp, okay? So if your business is consistently producing really healthy profits beyond what your reasonable salary is, if you are willing to handle or outsource payroll and compliance, and you already operate as an LLC or even as a standard C corporation, and you are ready to elect S Corp for tax purposes, then this sort of fits. So your typical workflow is basically you either start as a sole proprietorship or with an LLC. As the profits grow, then you might want to consult a tax professional to estimate your potential savings versus the payroll and admin costs. And if it pencils out, then you might decide to elect S corporation and set up payroll. Now, it doesn't mean that you have to wait to start doing payroll until you are an S corp. You absolutely can run payroll as an LLC. All this means is that if you do this and then you elect to be an S corp, then the taxes are going to be a little bit different that way. So think of an S corp as a switch that you might flip later on down the road for tax efficiency. For most brand new low revenue businesses, this is not our starting point. Most of us are going to start out as sole proprietors or as LLCs, okay? So let's convert all of this into some simple filters that you can use to make a decision about what business entity you should form. The first filter would be your level of risk. What is the likelihood and the severity of something going wrong, right? Are you operating out of physical locations? Are you doing events? Do you have products or services with in-person components? These usually carry more risk. So higher risk leans more toward an LLC, plus adding the appropriate insurances, right? Your second filter would be your revenue. What is your revenue now? And what is your revenue potentially going to be in the next 12 months? So if your revenue is minimal or variable while you're sort of validating the idea of your business, then a sole proprietorship can be perfectly fine to start with. If you expect steady revenue and you want to operate maybe a little bit more professionally, then consider the LLC. And then if your profits become consistently strong beyond your salary, then you might explore an S Corp election with a tax professional, okay? And then your third filter would be your tolerance for administrative tasks. Like, be honest. How much paperwork can you reasonably manage? A sole proprietorship has absolutely the least amount of admin. An LLC does have some moderate requirements, but in my experience, it is very, very manageable. An S Corp honestly has the most admin, and I have owned S Corps before. It does require payroll. It does require those filings. If you are not somebody who enjoys this type of paperwork, it might be something that you end up outsourcing. So if you hate admin, but you need the protection, then maybe consider forming an LLC and then hiring a bookkeeper or an accountant. Anytime you're operating in one of these structures, whether it's sole proprietorship or LLC, there are some trigger points where you might want to revisit what your structure is. So if you sign your first significant contract or lease, if you start selling a physical product or hosting in-person events, the first time you hire an employee, or you decide that maybe you want to add a partner, if your profit level suggests that maybe there might be some ways, or you might need to look at some ways to save money after salary and admin costs, or if your insurance broker talks to you that maybe, it might be time for an entity change based on exposure, then all any of these things happens, it might be a time to go back and revisit your business formation, your structure, okay? You don't need to be perfect right off the bat. You need what is appropriate for now for your business with a clear note on what might make you change later on down the road. So, quick recap. A sole proprietorship, it is the fastest, it is the cheapest, but there is no liability shield. So this is really good for low risk sort of validation of a business idea. An LLC makes you a separate entity that gives you that liability protection. You have a little bit more flexibility in your taxes and very moderate administration requirements. This is a small business workhorse. And then we have your S Corp election. You have potential tax savings at your higher, more consistent profit levels. It does require more admin, so this is usually a move that you make later on. Use that risk, revenue, and admin tolerance evaluations to pick your structure for now, and then watch for trigger points for you to revisit. So I'm going to drop a link to a downloadable sheet for you to help you decide which business structure would work best for you. It's one page, but it clearly lays out your decision matrix based on your liability risk and your revenue outlook, and will also include those triggers that might make you decide to change things up down the road. It's always a good idea to write these things out so you have a clear work plan moving forward. This download will also include a cheat sheet with quick explanations of each entity so you can choose which works best for you, and a checklist to help you maintain that liability shield between you and your business depending on which entity type you choose. So check the show notes for the link for that download. Next week, we will handle the practical setup of your business, licenses, permits, and business banking so that compliance feels more like a checklist and less like a maze. If today's episode clarified your next step and you'd like a calm space to keep building off of social media, come join us in the Growth Table Small Business Collective. We host monthly workshops, we keep a growing resource library, and offer peer-to-peer support. Plus, you get access to me for questions and simple guidance. It's a low-pressure way to get consistent help while you grow. You'll find the link in the show notes, or you can head to growthtablesbc.com. You've got this. I'm cheering you on. See you next week.